There we go.
Okay, well, welcome to Tax Planning and Preparation for Sole Proprietors. We're recording this webinar. And at the end of the webinar, within a day or so, you'll get a link to the recording and you'll get a link to the slides, provided Joe's prepared to share those slides. Are you prepared to share these slides, Joe?
You betcha.
Okay, my name's David Walker. I'm gonna moderate this a little bit. I'm the director of the Shasta-Cascade Small Business Development Center. We are a program of Cal Poly Humboldt University, and like all SBDCs around the country, we provide confidential, no-cost advisory and training services for small businesses. We're funded by the Small Business Administration, and in our case, the state of California. And we cover we help small businesses in Shasta and Trinity counties in California. And if you're in that area, we can help you with the one-on-one advising as well. If you're not in Shasta, Trinity, or Siskiyou counties, there's going to be an SBDC near you. There's nearly 1,000 of them across the nation. They're funded by your tax dollars, and like Joe likes to say, thank you for paying those taxes. It allows us to do this stuff for you. So if you'd like advice from an expert in whatever field you're having difficulty with, or you have questions about in your business, you can contact them and get some no-cost confidential advice. We also have a partnership with the Better Business Bureau, and they're helping us out by helping promote some of these webinars. The Better Business Bureau of Northeast California, to be precise, has been helping us. They're a nonprofit organization that helps your business by helping consumers find businesses and charities that they can trust. They've been around for over 100 years, and they're dedicated to building trust between businesses and communities. So that's another thing that might be good for you to do, would be to check out your local Better Business Bureau as well. As I said, we provide no-cost expert advice to your small business. These are the advisors, pictures of these really good-looking advisors that are in our area, and we have access to another 4 dozen or so across Northern California, and they all have expertise in different areas of business: accounting, HR, finance, restaurants, whatever. Any business question that you might have, we've probably got the answer for you, and we can get it to you at no cost. Let's see what the next slide looks like there, Joe. That's our bragging slide. You look at those numbers and you say, oh my goodness, we're so good. So let's look at the next slide. Okay, this is what happens when you get lawyers involved. We're required by the attorneys to read this, because some of you may be on a cell phone, you can't see it, so we have to read it to you. So I'm going to read it. I've gotten pretty fast at it. Joe, time me. Okay, the information provided in this webinar and any supplementary materials provided to registrants are intended for educational and informational purposes only and does not constitute professional, financial, or legal advice. No registrant should act or fail to act on the basis of any material contained in this webinar without obtaining proper financial, legal, or other professional advice specific to their situation. The Northern California Small Business Development Center and its host, the Cal Poly Humboldt Sponsored Programs Foundation, specifically disclaims any liability, loss, or risk, personal or otherwise, which is incurred as a consequence, directly or indirectly, of the use and application of any of the information presented in this webinar. So there. Okay, and I think that's it for me. Joe, it's all yours, buddy.
Hey, thanks, David. I really appreciate it. Welcome, everybody. My name is Joe Rodola. I am the normally the startup guy that you'll probably meet with. It'll either be me or John normally on the local basis here in Redding. My background, as you can see, basically is in credit and finance. So if you add it all up, it's about 50 years in the credit industry. Whether it was making loans, teaching people about credit and how to use it, helping people get out of debt when I was the certified credit and housing counselor at CCCS, and the director of that particular organization in Shasta County. I've owned a business for a while myself, and I've been helping small businesses directly through these nonprofit, not-for-profit organizations for the last 10 years. So, this disclaimer's there because you need an attorney and you need a CPA, but basically we do have a lot of information that's relevant. So today we're going to talk about sole proprietors and how to track sole proprietor income and expenses easily. Okay. We have found, and it really came to light during the COVID era, we'll call it, from about 2020 on, that sole proprietors, for many of us, didn't understand enough about the financial numbers backing their business. They either knew how to perform tasks and help clients, no problem. But a lot of us did not know where the numbers go in the appropriate columns to file taxes, okay, to track income and expense, and to know what these columns represent, okay? So we're going to talk specifically today about sole proprietorships and how they can process taxes. It's tax time, sneaking up on us, right? We got about another month till we owe Uncle Sam what we owe them for last year. And so pretty good timing to keep this information fresh. So first of all, the business structure we're going to be talking about today is sole proprietorship. There are many other structures obviously out there: partnerships, LLC, limited liability companies, corporations of various types, and then there are partnerships and all sorts of other in-betweens. But today we're going to talk specifically about a sole proprietorship. In other words, a single owner. My particular business, like many service businesses, are run by one person. Okay, one person. That's where the sole comes in. Sole meaning one. So one person operating business. Most of us, for the most part, have no employees. And that's definitely the case. I've been in operation for 12 years, and basically I am the CEO all the way down to the janitor of my particular business. So technically in my case, since I'm an information giver, a passer of information, I pass information to people, technically, unless I could process or send what I have in my head to someone else, if something happens to me, I pass away, for instance, my business ceases to exist. So that's really the perfect example of a sole proprietorship. So sole proprietorship pros and cons. What are the differences between the pros and cons of a sole proprietorship? Person is exclusively the owner of the business, okay, and entitled to keep all the after tax profits. So everything goes to me, right? It's the simplest form of business to start. So that's always good because you don't have to go through a lot of headaches and paperwork and fill out a lot of documents and spend a lot of money just to set the thing up. You prepare and file your tax return and attach it to your regular tax return, personal tax return at the end of the year. Okay, so it's called a Schedule C, and we'll go over the Schedule C. We'll really take a look at it here shortly. You don't have to register with the Secretary of State, state of California. You don't have to worry about it. You can hire employees, you can hire contractors, and it's a lower operating cost altogether. Okay? The main negative of a sole proprietorship is still liability. Liability. So you're personally liable for anything that happens, either contractually or if you get sued. Okay, so you have to take care of that on the sole proprietorship by having a very strong business liability policy. Okay, business liability policy. We have several other classes and webinars that talk about that. Okay, and we'll give you that link at the end. All of this will get to you. All of you who have signed up and are listening right now will get copies of all the information and links at the end to all of our online services. Strategies. Basically, there are a couple of ways to track income and expenses. You can use an Excel sheet, which you will get a copy of at the end of this webinar. You'll get a copy of that Excel sheet. It's an Excel sheet that's made up that you just put the income in, subtracts the expenses, equals net profit. Okay, really easy form. Sole proprietorships with 1, 2, maybe even 3 sources of revenue, income. Revenue and income, same thing. Okay, so revenue or income, sales, whatever you want to call it. The money you get minus the expenses equals a profit. Okay, very simple. Also, you have to estimate your tax liability. That often comes up with the idea that you should pay some of your taxes when you're self-employed on a quarterly basis. If you don't know how to send in those particular quarterly estimated tax, you contact your CPA, your bookkeeper, your accountant, whoever it is you use at the end of the year to review your tax bill. And they'll give you the 4 little quarterly little tags and where to send the money. Okay, because you'll report it normally as a sole proprietor under your social security number. Unless you have employees, then you'll have a tax ID. So social security number works fine. You just say, in my particular case, for instance, my business is Joe Rodola's Debt Consulting. So I reported under Joe Rodola's Debt Consulting, my social security number, here's the quarterly tax I'm paying for that particular quarter. Okay, so you normally pay April 1, July 1, October 1, January 1. You just kind of send them in. So you're prepaying your debt. Okay. And remember, not only are you going to be paying tax on your self-employed profit, you're also going to be paying self-employment tax. And people go, well, what is self-employment tax? That is technically your Social Security payment each month for you. Okay. The theory is, as you pay this each quarter or once a year, when you pay at the end of the year, this goes into your Social Security and will be there at the age of 62 or 65, depending on how and when you started your work. The younger populations, I think, are having to wait a little longer than us guys, because we started a long time ago in this process. But needless to say, the self-employment tax sometimes shocks self-employed individuals. Because if you owed, say, $2,000 in IRS tax to the federal government, you'll also owe about the same amount to self-employment tax. So you got to remember, you got the 2 categories you're going to be paying into as a self-employed person. The tax bill to the feds and your self-employment tax, which normally is double. They're pretty close, Okay, income again is defined. There's a section there for you to worry about. But basically, income is the money you take in. Okay, it's derived by whatever it is you're selling. Okay, whether it's retail products, you're selling a pen or in this case, a calculator. So if you're selling a calculator, that's a retail product. As you sell one to me for $5, I give you the $5. That's income. Not net income, but income, right? If you're retail selling, you'll also have cost of goods. So in other words, if you buy this calculator wholesale for $1, you buy hundreds of them, right? And you sell them to us for $5. So you paid $1, sold it to us for $5 plus sales tax. California, especially, you got to pay sales tax, 7.25% still in most areas, some higher. The difference obviously is your gross profit. Okay, cost of goods would be $1. You sell or revenue for $5. The $4 is called gross profit. Okay, it's not taxable at that point. The money is taxable after you take out all the other expenses. Okay, and we'll cover those expenses shortly. What are your business expenses? Basically, there are ordinary and then necessary. Those are the 2 expense categories. Okay, ordinary expenses normally are common to whatever industry you're in. Necessary expenses is one that is helpful and appropriate for your trade. Okay. You don't have to really know that other than the fact that those are some of the terms you'll see when you talk about business expense. Tracking income and expense. Obviously, why do you have to do it? Well, to gauge whether or not you're making any money, right? There's several of the classes we do called financial management. In other words, you can use these financial statements to make valuable business decisions. Should I add that piece of equipment? Is it going to save me time? Is it going to save me money? You know, all those things come into play. You want to make adjustments as quickly as possible, which means you better stay on top of your profit and loss at least monthly. I like every 2 weeks. Every 2 weeks, you should be checking to see where you're at. Okay. Because you want to adjust quick if there's an issue. If it's failing or falling, you want to find out how. You want to find out, you know, maybe you have to send employees home. Maybe you have to cut some employee expense. You better do it quick, because the longer you wait, the more you're going to lose. Things to think about before setting up your books. In other words, deciding whether or not you need a QuickBooks or other type of online or, using a computer tracking device or a simple Excel spreadsheet. Okay. How complex is your bookkeeping? Do you have a lot of accounts receivable? In other words, you bill out, wait for payments to come in. Do you have 20 different categories of income based on what you do? Like, I make money doing consulting, I make money teaching classes. So at that particular point in time, when I started to have 5, 6, or 7 income possibilities, I decided to go with QuickBooks at that point. By the way, we have a really good QuickBooks trainer that works for SBDC here. And there's some great classes online to take for understanding QuickBooks. And you can have one-on-one conversations with Rebecca. She's fabulous. So again, what's the complexity of your business? Do you have a lot of vendors you buy from? Okay. Do you take credit cards, not credit cards? Do you bill and wait for payments to come in? Okay. That's that sales immediate, or are they delayed, right? So that's kind of why you make the decision as to what direction to go. So we're going to go ahead and start by keeping it simple, right? Sole proprietorship, taxes, keeping it simple. So the simple way to do it is by using an Excel tracking sheet. So let me stop sharing this for a moment. Let me go and see if I can be fancy with this electronic stuff and share another doohickey here. Oh, there it is. Okay, so hopefully we are now seeing, if somebody could let me know the case, an Excel sheet.
Yep, looks good.
Thanks, Devin. So this Excel sheet, which you'll get a copy of, is really cool. And it's been created by someone other than me, to be perfectly frank. And I'm going to hide my head here. There we go. I'll put it over here for now. Get it out of the way. It was created again by somebody else, and it's just so nice and easy to use. So you've got income and expense statement is what we call it. You can also call it a profit and loss statement. It's the same thing, P&L. And this is for the year 2022 for ABC Company. So again, you can put, these are blank, zeros are in it, but it has the sample formulas all built into this Excel sheet. So all you have to do is put in the numbers, and it adds across and adds and subtracts downward. Isn't that cool? So if you made $1,000, we'll look at January here. You made $1,000 in January selling things like maybe these calculators we talked about. You sold $1,000 worth of the calculators, but it cost you $200 to buy them. Okay, so your gross profit, 200 out or minus from the 1,000 gives you a gross profit of $800, doesn't it? Then you have the regular expense column, which is the expense categories below. You can change the names to fit your business. Doesn't have to stay these exact names, but these are some of the things you normally will have: rent, utilities, telephone, insurance, advertising, etc. Okay. One of the ones that people often forget is mileage or travel expense. As a sole proprietor, normally you would not buy your automobile or your travel means of travel in the business name. You'll normally have it under your name, right? Or you and your wife's name or something. So you use the business, the car for business, certain mileage and certain times of the day. You track that. You track it on an app on your phone if you're really into technology. My wife and I still use the old-fashioned, pocket calendar with the days of the month across there. We use a tripometer in our car, so you can go to tripometer B, clear it when you start, when you get home and stop, read the number off, put it in the book. Last year, you'll notice it was 56 and a half cents a mile. In 2023, for the new year, it's 65 and a half cents per mile because of the gas prices. It's jumped a bunch. So basically what that says is for every mile, you get 65 cents that you drive. It's hundreds, if not thousands of dollars in write-off per year. The mileage expense covers everything, by the way. It covers expense for tires, lube oil filter, supposed to cover the gasoline costs, minor repairs, windshield wipers, supposed to cover all that as a per mile expense that can be deducted. So don't forget that, especially if you're doing service businesses where you have to travel. Even if you're like you mow lawns for a living, you're a landscaper, a contractor, obviously. My wife's in real estate, goes around to different houses, right? I go to places to teach classes. Yeah, it all adds up. It all adds up. And so you put those numbers in the column for subtraction. Line 25 in this particular case adds all those up, $789.75 worth of those expenses. So technically, in the month of January on this particular business, you made $10.25. That's something. So you automatically know exactly how much you make when you input these figures. It automatically adds and subtracts. Luckily, you're making more money each month, as you can see across the top there, each month of the year. Got the grand totals of $19,700 in sales, minus cost of goods, $3,940. Gross profit of $15,760 for the year, minus all the expenses. Your annual profit for ABC Company here in 2022 was $7,365.25. People then will often ask, okay, so if I made $7,365, how much tax am I going to pay on that? If you calculate 15 to 20%, you're safe. You're safe. If you want to, hopefully have a tax refund, especially if you have other income sources, like say a wife or husband works for a living and you're the sole owner of a business, you have other people helping to pay tax along the way. If you pay 20% of this as quarterly payments, you may get a little tax refund at the end of the year. So the main thing is to pay as you go. Okay, pay as you go, because if you do not pay, I don't know the exact number, but if you don't pay a certain percentage of your taxes before April 15th of the next year, you get a fine. You get a fine. So the fine could be, 1%, whatever it is. So if you don't want to pay the fine, pay quarterly. Okay, so there's your profit and loss statement, easy peasy for a sole proprietorship for 2022. So what do you do with this number? 7,365.25. Well, let's stop sharing that. And I get to go in again and share another thing with you guys. And that is, if I can find it, where did I put my Schedule C? All right. It's in here somewhere. I can't find it. Why isn't it there? Whiteboard, show windows. That's kind of strange. It's not there. Now I'm buffaloed here. Hang on a second. Let's see if I can make this happen. See if I can find this document.
You want me to share it?
Yeah, do you have the?
I do. Let me share the screen and I'll do that.
The PDF?
Yeah.
I see it on my thing, but I can't see it on my share. Don't know why it's not showing. Bummer. Well, yeah, that's the blank one. I had the one all filled out. Darn it. Technology is great when it works, but isn't that weird? And I'm showing it here too. Oh, there. Oh, that's the blank one, huh? Is it this one? Oh.
There it is. That one's filled in.
Did it pop out?
It did.
Okay, cool. And it's now on screen. Wonderful. So Schedule C, this is the attachment to your 1040 personal income tax, okay? This one obviously was from 2019 when we originally prepared these. Each year, the numbers change for the dates. The categories basically stay the same. So what happens here is you take and transfer the year-end totals off of your Excel sheet into the appropriate categories. So your gross receipts or sales is that $19,700 that you sold in that year. Your cost of goods gets subtracted, $3,940 for a gross profit again, or gross income, $15,760, just like your other document showed. Then in the expense area here, that's where all those little numbers go for rent, advertising, your travel expenses, insurances, etc., utilities, okay? There's a category for other expenses that adds up everything else. So your grand total, as it was on the Excel sheet, $8,395 for a net profit of $7,365. So that is what you do, is you take your profit and loss sheet, whether you use QuickBooks or the Excel sheet we showed you as an example, and transfer the information over, your tax person will, onto the Schedule C. So your net profit that you pay taxes on is line 31. Okay, line 31. That's how much money your business made for the year. Okay, even though you sold and collected $19,700 in sales of whatever it is you sold, you cleared or netted $7,365, because everything else was cost of goods deducted and other expenses. Okay, that makes sense? So you only pay tax on that bottom line. All right, so we're gonna stop share that, and we're gonna go back in, and we're gonna share the slide screen one more time, which should be this guy. All right. Are we back to the slide screen, or are we still?
Yeah, we're at the slide screen. We also have a question.
Okay, great.
Question is, for a sole proprietor who has a business office and pays rent, but splits the time at a home office, will you be going over calculation / process of deduction for home office use?
Yeah, I will not be doing that because of the fact I'm not a CPA or an accountant, but yes, you can. So what you want to do is you want to check with your CPA, accountant, bookkeeper, whoever it is that helps you with your taxes, and they will help you with that calculation. It's all based on usage of that room, and is it only used for that purpose? That becomes a real question. For instance, my wife and I split a second bedroom as our office space at the house, okay? But we also use that office space for personal use, see? So there's some issues in gray area there, but if you check with your CPA and your accountant, they'll be able to walk you through those steps. So you could actually technically have both a regular rent bill and a deduction for home office use. So that is it. We covered the two main and biggest points of the actual calculations, how to make them, and where to put them on your tax return. So tracking expenses continued. Using the profit and loss statement from the Excel or software, use the profit and loss, prepare the Schedule C. No shock here. Okay, no shock. If you use QuickBooks, it will actually print out a completed document. You can pull it right up on the screen that shows your ongoing profit and loss at any given time of the year. As long as you're inputting your expenses and income quickly as they happen, right? That will be a solid number you can use at the end. So again, you can use software, okay? Many people I know, there was a thing I saw not too long ago where if you, let's say you went and bought printer ink for your printer that you use for business, okay? So yeah, printer ink. There's an app where you can shoot a picture of that receipt at Office Depot or whatever, and it'll automatically put that in your QuickBooks. I mean, you can get as technical as you want, okay? Pretty cool. This day and age has made it a lot easier than keeping everything in a shoebox. I still keep everything in a shoebox, but you don't have to, you know, you can actually use a phone or a scanner and scan those things into the program and not have to keep all those boxes. Luckily, we have a company here in town that'll do shredding once a year for free. Guess where I go? I go to that shredder and have them shred my stuff after I don't need it anymore. But suffice it to say, you've got all sorts of capabilities for tracking income and expense. It's absolutely fabulous. So again, compiling the business expenses, the thing to keep in mind is that if you go, say, to Home Depot or Office Depot, and you buy something for the business, and you also bought something for your personal, circle the ones that are for business and make sure to take it off your taxes, man. Because that's what happens is, you know, most people, when you think about this, want to lower the amount of tax liability, right? You don't want to pay the IRS anymore, and you absolutely have to. So you want to lower that last number, that line 31 we talked about on that Schedule C. So you got to track it all. That's why I always bring up the mileage thing to all my clients that walk in the door. If you're opening up a restaurant, if you're opening up, like I said, some kind of service business, you're going to people's houses, or you're going out like I do to teach classes at the library or here at the office downtown, and I live out by on the way to Palo Cedro, I'll tell you what, that Palo Cedro into town can add up, right? That can add up. And so you don't have to actually show that on your net income. You owe lower figures, right? Make sure to track it as much as you possibly can. And even if you are, in my opinion, shooting a picture with your cell phone to track expenses, I use a shoebox every year. Okay, I put on a shoebox, Joe's Business 2022. All the receipts go in that box. And the reason you do that is in case you're audited. Knock on wood. I've been in business now going on the 12th year. This is going to be the end of my 12th year coming up. Haven't even been questioned. Okay. Shouldn't say that. I probably will now. But suffice it to say, hey, I got the box, man. I got the calendars with all our tracking of our mileage in that box. I've got all the receipts in that box, all my deposit slips for putting the money in the bank in the box. Okay. One of the other things that makes it easier for tracking these expenses, make sure that you have a separate business bank account. Okay. Don't it's tougher if you commingle incomes, right? So if you pay the house payment out of a personal checking account, you don't want the business income going into the same account because it balls up the works, especially if you're using QuickBooks with an automatic feed into your QuickBooks from your bank account. So have a separate business account, okay? You can get them at credit unions now in Reading. Members First is doing it. You got all the banks do business accounts. Go to one that isn't expensive, okay? The least expensive bank accounts for business are going to be the little business banks we have in the area. Cornerstone Community Bank, Golden Valley, Tri-Counties, they all have reasonably priced business accounts. If you go to the big banks, they're going to charge you more. They'll have minimum balance requirements and all that jazz. So shop around, but have a separate bank account for the business. That way, when you draw out money from that business bank account, you know that that's now your income per se, your profit that you're taking out of the business. And then transfer that to your personal account and go ahead and pay your bills, for the Spectrum and the TV and all the stuff you normally pay. Cost of goods was another question that came up during all of this, the grant money. Okay, all the grant money that was flying around. Everybody was saying, okay, yeah, what are your cost of goods? If you are a service business, that provides a service, not a tactical piece of equipment, right? You're either teaching somebody, you're mowing lawns. There really is no cost of goods because you're not selling the cost of goods to anybody. You're not selling the goods to anyone. You're selling the service. So the service businesses, when they asked that question, said, what are my cost of goods? Everybody had that question. We were answering the phone 24 hours a day. What's cost of goods? Well, if you're doing a service business, you don't have any. You don't have any. It's zero. Cost of goods is when you sell product or products. So it's different from retail than it is in service. The cost of goods is the cost of the raw material. Could be the cost of the labor to produce it. If you're making, for instance, I have a person that's a candle maker, sells candles. So they have to calculate how much time they spend making the candle. Okay, and what's that worth? Is it $15.50 an hour, whatever minimum wage is? What is it? So that could be cost of goods. And they're selling the candle, right? And it's got wax, and it's got the wick, and it's got the wrapper, and it's got the label. All those pieces are cost of goods sold, okay? Because you're selling a product. So that's something to keep in mind as well. Indirect costs, obviously there's, examples are rent, office equipment, utilities, phone, et cetera, et cetera, et cetera. So no craziness there for sure. Maximize gross income, minimize taxable. Now, this was put into this class technically from an accounting person, okay? One of our buddies. We used to teach this class as the Joe and Joe show, because we had two Joes working here. And from a tax viewpoint, you're right. You want to show as little profit as possible to have the least amount of tax owed. Not only tax, but self-employment tax. But there is a catch, okay? As a banker, which I was, and had to try to convince my bank to give you a loan based on the calculations of a profit and loss statement that showed zero net income at the end of the year. It was very difficult for me to say, yeah, I can make payments, but I don't have any profit. Whoa, dude, you see where I'm going? So don't write it all off, okay? I had, believe it or not, back in the 70s, go back a while, it was before all this fancy computer stuff. Who would have thought we'd be doing somebody said it the other day, we're doing George Jetson. You ever watch the Jetsons, right? We used to have, they had TV phone calls. How about that? Now, all those years later, we're doing it. But suffice it to say, I had customers come in and say, hey, Joe, I sold $1 million last year. I'd say, wow, congratulations, $1 million. This is 71. Okay, that's a lot of money in 71, let me tell you. And then I'd ask the guy, well, how much did you make? Well, nothing. I said, oh, so you want to come in and get another piece of equipment, but you don't have any money to pay for it. And he'd go, well, you know, Joe, and I took this and I did that. And I wrote off my cat, I wrote off my dog. You know, it goes crazy. So show some profit. Don't wipe it all out. Because if you're going to grow, especially if you're growing, if you're going to be growing, you need to hire some employees, you need to buy some more equipment to offer more services or whatever. Better have some money in is showing that you're making some money. Otherwise, it'd be very difficult to come up with those answers. Okay. I see a bunch of stuff in the chat. Do we have more questions coming in at this point, David?
We do. I've tried to address them.
Oh, thanks.
But let's go through and make sure I didn't screw anything up here. Right. One person wrote, when we're talking about using your house or your home office, does the same thing apply for utilities related to the home office? And my response was that utilities may be deducted in proportion to use, but again, it can be complex and they should discuss a specific situation with the tax advisor.
Right. That's perfect.
Okay. Next question was, how do I track inventory for tax purposes? Let's say I bought $10,000 worth of inventory for 2022, but only sold 3,000. The inventory is not perishable, so I'm carrying it over to 2023. Is this 10,000 of inventory considered cost of goods? My response is cost of goods is only what is used. So the cost of goods would be 3,000. The rest would be considered inventory, which was really an asset, and it gets lowered as it's used. Yeah.
It shows up on a balance sheet.
Right.
For those of you who have assets in the business, like a piece of equipment, big piece of equipment, you know, something that's 10,000, inventory, like David just talked about, a building, say you bought a building and your office is in that building, right? And you bought the building, that building is an asset. If you're a corporation and you bought a car and it was in the corporate's name, that's an asset. You'll have another page besides the profit and loss called a balance sheet. And that's where that inventory goes, is on the balance sheet, okay? The leftover inventory, the one part you haven't sold. See, when it becomes sold, it becomes income because the product is now out of your hands and in the hands of me, the buyer, and it subtracts out of the inventory total. So you're absolutely correct. It just sits there as inventory unsold to the next year or next month. Any other ones of,
And that's all I see at the moment. Unless
okay,
I'm missing something, I don't see anything else.
cool. All right, so let's see what the next slide holds here. We're getting close. Yeah, I thought we were getting close. So as a conclusion, make sure to track all your expenses with either software, cell phone, shoebox, whatever you want to do. Every time you buy a piece of, a package of paper for the printer, ink for the printer, an update to your to some kind of program that you're using for your business, mileage, track that somehow. You do have to have it tracked, whether you use an online tracking system, a phone tracking system, or just the old-fashioned pocket calendar in your center divider of your car. You got to track it. You got to prove that you did it. You'll also have to keep track of total mileage. So what we do on the mileage, just to give you a hint, for us, we've been doing it for 25 years now because my wife's been in real estate that long, is we put the year-end mileage of the vehicle in the first month. So January 1st, we'll say mileage, 55,500 miles. At year end, December 31st, on that little calendar, we write the year end miles. So now let's say we're at 65,000 miles. So that year we drove 10,000 miles. Okay. Then we add up all those little numbers on the tripometer B that we use to put into those calendar dates. By the way, I run that monthly. I don't wait till year end because it's a real pain. So I do it monthly. I add up the totals at the end of the month. I say, okay, we drove 500 miles this month and 400 miles this month. So you know how many miles you drove for business. The rest is for leisure, right? You go get a haircut. You go to Shasta Ski Park to ski. You wouldn't go today, right? But boy, do they got snow. Anyway, so the rest of it is leisure miles. So that way you can go to your accountant at the year end or whoever does your taxes with you and say, all right, this is how many miles I drove for business. This is how many miles I drove for leisure. And you got it in the book. See? And you put the book in with all your receipts for the year. I put the 2022 in the first week of January. I wrap the box in duct tape when I'm done and put it in the storage, that little storage bin. So that way I've got a whole year's worth of proof in the box, okay? And again, if you use a computer printout, if you use your phone and copy the actual receipts, great. Saves you having the shoebox. But again, got to have that. Keep it for 7 years, by the way. That's the normal rule of thumb for keeping stuff to prove that the tax person is a minimum of 7 years, okay? Run the profit and loss at least monthly. I like to do it every 2 weeks. Pay your taxes on time, pay quarterlies, especially if you're making money. Well, I'm talking about making money. If you're making more than $1,000 a month net, okay, so you have what, 12,000 a year in net profit, you better be paying quarterlies. Because at the year end, you don't want to come in April and say, oh, by the way, you owe $4,000 or $5,000 and $100 fine because you didn't pay it during the year. You don't want to pay the IRS any more than they deserve, right? So sit down with your tax specialist and go over that information. And remember, making money is easy. Keeping it is the challenge. There it is again, that reminder, pay the quarterlies, right? And if you don't know how to do that, you can go on the irs.gov website and weave your way through the thing, okay? And you can pull those little blank forms up. Or when I get my taxes done, I got my taxes done about a month ago. I wanted to get a head start on what I was going to owe. Normally I end up owing a little bit. I very rarely get refunds. And I had them made my quarterlies for this year. So they got the little papers that go in the envelopes, right? So at the end of March, April 1, I'll send them with my P&L that I've done through March. I'll just write a check and send it to them for the first quarter of this year. And it'll say 2023 taxes. This is my social security number. Send it over to, what is it, Utah or somewhere? There's a mailing address that they always come up with. Mail it off, boom. And then check clears. Aha, there's my first payment to the IRS. Make sure it's stamped on the back, which I do. And it'll tell you that the federal government got your dough. Okay. Yeah. And pay them on time. That's a huge point. Any final questions here?
We had a question on whether or not we do a presentation on other business types. So I put into the chat a link to our YouTube channel where we have a video on legal structures and tax implications for different legal structures. We do, our YouTube video has, as Joe's probably going to tell you, 200 and some odd videos on different business topics. Some of them are repeated, but it has a lot of really good information. And we're probably due to repeat that one on legal structures, Joe. That's something we ought to look at.
Yeah, that's true. That's very true. And we have other people that present sometimes on these classes. And the other thing too, for those of you in Redding, Shasta County, and even Trinity County, once the snow lets up, we do live classes here downtown now, which we started late last year a little bit. And we're going to hopefully continue to do it here in 23. And we'll do live classes right here in the office. So sign up for our services, spdcsc.org. As you can see on the screen here, it's got all these nice links, right? Our location is 1305 Sacramento. We got Emily, who is our right and left arm many days, that she keeps track of everything and keeps us straight. But spdcsc.org, sign up for our free services and you'll get all the updates, newsletters. If a new grant pops up out of the blue for your business, you'll know first, because we'll send it to you. Okay. And then look at all that stuff for our social media. Who would have thought? Twitter, LinkedIn, of course, Facebook, got a good Facebook page. And I'll tell you, David and I are very proud of that YouTube channel. One thing that COVID did create is our ability to create our own YouTube channel. And it's got a ton of good information, all no cost, free, whole thing. So you'll see my bald head on there and a lot of the other advisors that teach these classes on as well. Are we going to send out the evaluation, or are we going to link one? Probably send it.
I did put a link in there. It's buried under questions, but
okay.
There is a link. Let me resend. Let me put it in here one more time.
Thanks.
Okay.
Oh, there it is.
That's the link to a survey. So yeah, if you'd take some time, we'd appreciate it. Fill out the survey. Tell us how wonderful we are or how much we stink. We'd appreciate it. We have thick skin. We can take it. And any suggestions you have on other topics that we might be able to cover, we really appreciate your feedback. Exactly.
Well, very good. If there's no other questions, then I want to thank you for participating today and hanging in there with us. And check out that YouTube channel. I'll tell you, you get hours and hours of valuable information, from marketing to how to put your website on the top of the search list. Well, it's great. It's absolutely great. You'll get sick of hearing me. I think how to start a business class has been on there about 10 times, 15 times. but there's a lot of other classes that are pretty cool too. All right. Well, I think we have done it. So again, thank you all for coming.